So for the next session, that is navigating IMS strategies for future-proof compliance. To do this, I would request Mr. Pulkit Jain back on the stage, Regional Head, Large Enterprise SAAS, Monetization, North India Clear. Mr. Pulkit Jain's specialization in building businesses in a fast-paced, dynamic environment, focusing on 0 to 1 and 1 to X journey. As a process oriented sales professional, he is adhered to proven sales methodologies like BANT and MEDIC. Also, he is passionate about creating account specific penetration plan and GTM strategies. He also enjoys developing business cases to help prospect understand the value. His expertise lies in growing strategies account from $25K to $100K to $200K. With over 11 years experience, he has gained significant exposure and business acumen in B2B and B2C marketplace models. I would request Mr. Pulkit Jain back on the desk.
Good afternoon, everyone. Thanks, Mitali, for the warm introduction. While we have discussed a lot of diverse topics, I would want to next 15 minutes focus on how GST tax compliances have evolved and how technology is playing a pivotal role in the entire transformation for the CFOs and finance leaders. Yeah. So not very long ago, what we used to see that people were doing paper-based accounting. Then came on-premise accounting, wherein people were using few of the other softwares, using laptops to do accounting practices. Then came cloud-based accounting, wherein people started using cloud-based softwares to do tax transformation, accounting, so on and so forth. And then in the next event of things, what we are seeing as part of the technology transformation, use of AI, LLM, chat GPT, automation, and then other number of things are coming up as we speak today. So what we are seeing in the entire journey is that technology is exploding like crazy. And as finance leaders, we have to ensure that transformation becomes a pivotal area where teams have to focus while they are building the GTM strategies, while they are doing cost optimization, so on and so forth. Now, while we talked about technology, I would also want to focus more on what are the top risks that are threatening your compliance strategy. Primarily, what we have seen is that there are 4 key elements which are actually becoming very pivotal when it comes to compliance strategy. One is essentially on data overload. We see a lot of users, teams putting a lot of hours day in, day out, working on Excel spreadsheet, and there's a lot of manual work which is happening at the user level, which might be the possibility that finance leaders are aware or might not be aware, but at the ground level, this is the reality check, wherein people are manually preparing their sales register, purchase register for tax reporting purposes. Then, since people are doing everything manually, obviously human errors are bound to happen. What we have seen is that there are 5% chances if people are manually preparing registers for their tax reporting purposes, then there is a possibility that at a controllership level or the leadership level, they will always fear inaccurate filing at the government level, which is coming into picture when they see the number of notices which government is bombarding with, right? Third piece is, which is very critical, is the regulatory changes. We are seeing every quarter, every 6 months, government is doing a lot of changes. Recently, government signed MOU with different departments. So they have tied up with GSTN, MCA, all these portals, income tax portal, they are now interconnected. So what is happening at the government level, they are sharing each and every data with themselves. So even if a minuscule error in what you are reporting in your MCA, what you are reporting in your GST, what ITC you are claiming, what deductions that are happening on the TDS side, government is aware about each and every transaction. And if you are not able to figure out or using technology, and if you are even doing some errors while you are doing the reporting, then you are bound to get notices. And the fourth piece is what government is pushing is on real-time reporting. Again, this is very important piece. That is where IMS, which is the new regulation that has come up, is coming into picture. And CFOs actually have to invest a lot when it comes to navigating the complexities as to how to manage this entire IMS system. Because with the sales data, government has already automated with e-invoicing. They were not sure how the purchase side of things are flowing at an invoice level. That is where government is coming up with this IMS portal so that they have each and every record at a transaction level what is the purchases enterprises are doing. Now, if you step back, I want to give some insight as to why government is doing these drastic changes and why enterprises have to follow technology, else they will not be able to catch up to the changes which government is coming up. Now, this is very interesting slide. If you just see how the global economy is growing, I mean, if I talk about tax to GDP ratio globally, that is hovering somewhere in the range of 25%. Now, if I talk about Indian economy, our tax to GDP ratio is around 11.7%. If I just do a breakup, around 6% would be your direct taxation and 5.5% will be the split of the indirect taxation. And even if you see a lot of developed countries, the tax to GDP can be as high as 50%. And in some of the developing countries, if I talk about Brazil, if I talk about few of the European countries, their tax to GDP ratios will be somewhere in the range of 25-30% as well. In few cases, it can be as high as 50%. What is the implication for you? Right now in India, our tax to GDP ratio is around 11%. It means that since we are competing in a global era, Indian government also wants investment from global companies. Everyone is competing to get more business. Even government of India is also competing to get more business from global companies, because Indian government obviously, if they have to increase their GDP, they have to do a lot of capex, and for that they need money. And since tax is a key source of revenue for Indian government as well, that is where government is also investing a lot on creating this entire digital infrastructure, which will help them to spend a lot in the Indian economy. What is the implication for you? So I was saying, what is the implication for you? Since government has to get more revenues, they will keep on coming up with more tax complexities every quarter so that they are able to get more revenues at the end of the day. That is where you see people and even government are investing a lot. And from a global perspective, since world is going digital, Indian government is also going digital. Eventually, companies also have to go digital when it comes to tax transformation. There is no choice at the end of the day. The question that I want to highlight is, when you think the time is right, who is the digital partner and with whom you want to integrate your entire ecosystem with? Now, if I talk about the regulations I was talking about, so this is just a glimpse of what IMS is all about. IMS is invoice management system. Like I said, from the sales side, government has already sorted the entire transaction level data via e-invoicing, electronic invoicing. But on the purchase side of things, since they didn't have visibility, because people were putting everything at a summary level, transaction level details were not happening, government was not understanding what is happening from the purchase side of things. That is where government is coming up with this new regulation, which is called as invoice management system, to ensure that whenever a seller raises an e-invoice, it is visible to your invoice management system in next 2 hours, and then you have to take actions accordingly. And at the end of the day, if you overclaim input tax credit, then you get DRC 01C notices, and if you underclaim ITC, then you are losing money on the table. So for CFOs and tax heads and even controllers, it is very imperative for everyone to ensure that you are taking decisions diligently. And since IMS will have repercussions on the masters as well, vendor masters, because if in a lot of companies, wherever we go, we have seen that vendor masters are obsolete, they are not updated. With IMS, we have to communicate to vendors on a daily basis because we have to take actions accordingly. So at the end of the day, from the tax team perspective, from the user team's perspective, it becomes imperative that entire ecosystem is integrated. Everything is there on this platform, on single platform, so that they are able to navigate and take decisions accordingly. And then again, credit notes will have again repercussions, because if you are missing out on credit notes, it will be having repercussions in your GSTR 2B, because of which you will not be able to take input tax credit, which will be having a direct implication on your EBITDA and PAT at the end of the day. So at the end of the day, I want to summarize like that: IMS is very difficult to deal with, because there are a lot of complexity which will creep up. So this is just a snapshot of how your entire tax teams must rethink the entire GST compliance, because there will be n number of additional tasks which will add up at the end of the day. If you see, there is a lot of PR preparation that your teams have to do on a daily basis. Right now, we tax teams usually start preparing the purchase register post they are done with the GSTR1 filing, which is on the sales side. But with IMS coming into picture, teams have to, on a daily basis, accept, reject, or hold invoices. And if they are not taking any action on the invoice, then they will be treated as deemed accepted, which will again have repercussion that you are accepting that invoice from the vendor, and you can't do any changes post facto. So at the end of the day, if you see, with IMS coming into picture, if I talk about 1st or 11th of every month, these are the 3 incremental use cases that teams have to do incrementally: preparing the purchase register, doing the reconciliations between the IMS portal, which government is coming up, and the purchase register. Like I said, vendor communication will take a very important aspect, and for that, vendor masters have to be cleaned on a regular basis. So those complexities will again come into picture very drastically. Then during 14th to 20th of every month, teams have to do the reconciliations between the IMS with the 2B, which is visible in your data in the government portal, and the purchase register what teams have prepared. And then you have to take ITC actions accordingly, input tax credit. So there are a lot of additional tasks which will come up for the user level teams to navigate. Now, this is a very interesting slide. I mean, CFOs might be knowing, but they might not be aware the task hell that your user teams are actually having to spend a lot. That is why you see a lot of attrition happening specifically in the tax function. And no one wants to be honest, put a lot of efforts on working on the IDT or DT side of things, because this is the task hell which your teams are doing currently. There are more than 27 processes which your teams have to do day in, day out throughout the month. They are actually burning out, and during the time of return filing, they are sitting in offices at 12 a.m. midnight and even beyond. And at the end of the day, if teams are working, then the tax head, the controllers again have to put in their effort as to see that whatever returns that are getting filed are accurate or not, because it will be having a repercussion if you are a listed company on your stock prices and your brand repute. So if you talk about these two tiles, these two bubbles, incremental bubbles which will come up as part of the new IMS, which will again have more repercussions, wherein you have to report your ITC actions to IMS, and you have to do reconciliations between your IMS, between your 2B and your purchase register. Overall, if you see, this is a task hell which teams have to navigate, and as leaders, finance heads, you have to ensure that teams, you have to provide a ecosystem wherein technology is playing a pivotal role, wherein all the mundane tasks can be automated, and your teams, instead of being a maker, they can act as a checker, and they are investing a lot of time on doing productive works, identifying where are the gaps in your books of account, in terms of how much ITC you are claiming at a GSTN level, or if you have to prepare state level trial balance, what kind of detailing that needs to be done. Your teams have to put in hours in those aspects, and whatever excels that teams are using while they have to prepare the sales register, purchase register, they have to prepare the TDS payable register, how we can eliminate the entire excels from the entire ecosystem, so as to ease out the life of the teams. Now, this is again a reality check. So in last 3 years, if you were to see the number of notices that government is sending, it has shot up by 15x. And 25% of the notices are from filing done which are backdated 4 years. Any enterprise which is more than 500 crore has received on an average 12 plus notices. And at the end of the day, this is just a start. Because like I said at the start of the discussion, government has already connected their entire ecosystem. They have connected GST and they have connected income tax, they have connected MCA portal as well. So they know each and every data point as to what you are doing as an enterprise. And if there is any iota of difference in what you are reporting to different portals, you are bound to get notices and you cannot shy away with it. Even last year, government came up with table for automation. People are still doing, because we keep on meeting customers, we have seen that people are still manually editing the table 4 instead of it should be automatically done basis the actions you are taking while you are doing the reconciliation. So those kind of manual checks, interventions needs to be eliminated if you were to reduce the chances of you getting notices. Now, I'll come to what is the need of the hour. It is absolute control over your data. And I'll just navigate how Clear is actually helping a lot of large enterprises remove access from the entire ecosystem. So, just to give you a perspective, this is a recent invention by ClearText. I'll take 1 minute just to give you a background why we have built this entire technology, which we were working from last 2 years. There are 3 fundamental problems that we realized while we met our customers. We did a survey of 50 plus enterprises, large corporates, industry leaders. We realized 3 fundamental problems teams were struggling with. First, at a user level, teams were manually preparing their sales and purchase register. Second fundamental problem that we understood was that at a tech head level, he always fear risk of inaccurate reporting because teams were manually creating their sales and purchase register. Third problem, at the controllership level, what we face that at the time of tax audits, at the time of GSTR 9 annual returns, they don't have any consolidated data, compliance data to be honest. So the teams have to toggle to their ERPs, pull in 50, 60 Excel files, create a report. Let's say if the tax, during tax audit, the auditor asks for a state level trial balance, backdated 1 year back. So the teams have to toggle, they have to invest a lot of time, effort, just to create the state level trial balance and then give it to their tax auditors. So those kind of complexities were there at these 3 fundamental levels, which are the pillars when it comes to tax transformation. As part of the technology transformation, we are just trying to solve these 3 fundamental problems for large corporates so that we can ease the life, we can provide more risk assurance, and at the controllership and the finance leadership level, peace of mind, which is the need of the hour. So I'll quickly give a perspective in a video.
We know finance leaders like you want control and assurance, not compliance headaches. You have all the data in your general ledger. Yet, 80% of enterprises are struggling to get assurance that their compliance data is accurate. This is because of a lack of tools and time. What happens then is that inaccurate reports are generated from multiple general ledger tables, creating a loop of endless data transformation. What you need in compliance is control and assurance. Large spreadsheets take forever to load, wasting valuable time. Even worse, they might crash, setting you back even further. Filing ITC claims notices are either inaccurate, blocked, or increased. Your teams are tired, frustrated with burning eyes and aching backs.
There's a GST audit coming up. I'm worried that my turnover and tax as per my financials and returns do not match. And I don't know the reasons for this gap yet. Also, I don't know the risk I'm carrying.
I'm on the verge of finalizing my 3P for the month, but I don't know if my team has expensed out all the ineligible ITC. I'm worried I don't want to overclaim my ITC.
I have to finalize my monthly TDS payment, but I'm not sure if the TDS advances, provisions, and credit notes have all been correctly reported in my TDS return, or I have to correct my previous TDS return.
I have just finished filing my GST and TDS returns for the month, but my team tells me that they had to make some changes in the sales register, purchase register, and TDS while filing. I'm worried that those changes will get missed in the ERP.
Let us show you how you can do this, actually from your general ledger, directly every day. Introducing GL Stream, the groundbreaking technology designed to power the future of finance. Now, stream your GLs for compliance. Your GL streams to us, so you can do a revenue GL versus SR recon and identify the reason for gaps such as deferred revenue, journal vouchers, unbilled revenue, and intra-company stock transfers. Your GL streams to us. You can run recon between GST purchase register and expense ledgers and identify for which expenses you have a mismatch. You report your tax liability correctly with this. No Excels. Final answer. Your GL streams to us. We can automatically extract all TDS reversal entries for set-off and reporting in TDS returns for corrections. Your GL streams to us. You can tally your books with SR and PR at any point in time to ensure there is an alignment in your books, return data, and data with government. Take complete control. Get assured compliance even before monthly book closure with GL Stream. You evolve as your business evolves instantly. Clear Finance Cloud for compliance. Supercharged with GL Stream.
So, like I said, this GL stream technology primarily fetches your raw tax GLs, revenue GLs, and few of the masters like HSN master, vendor master, and your customer master. So, instead of relying on your SR and PR reports, which is fetched from your ERP, because those reports would have been created at the time of ERP implementation, and like I said, government is evolving, every quarter they come up with new change. To keep up updated on those reports is practically very difficult, and fundamentally what we have seen is that there is around 2 to 5% gap between what your GL data is saying and what your SR and PR data is saying, basis which you are doing your report, tax reporting. Because there are a lot of edge cases which gets missed. Your RCM transaction, ineligible ITC invoices, your JV entries which your user teams would be entering at the time of reporting, but you might not be knowing what is happening while they are putting in those JVs. And if 3 years down the line, if you get a notice, you would not know who would have passed that JV, what time, what information, it will be gone forever. And then you will have to answer to the department why you did what you did, right? So those kind of use cases are very difficult to tackle, and that is where this entire technology would actually help you transform. So at the end of the day, what I was saying ki, primarily how Clear is helping, we are pulling raw text GLs and masters, and basis that all those registers are streaming to the cloud platform that Clear provides, and basis those GLs and masters, entire registers are getting created on the cloud, basis which the reporting is happening. And at the end of the day, since we are pulling in the raw GLs and registers are created, you will have entire visibility. Even if you want to fetch in the state level trial balance, which is the need of the hour and gets asked in a lot of tax audits, you can just pull in the information without going into your ERP back and forth. So at the end of the day, this technology would help you ensure that you get zero surprises at the time of annual reporting, 100% assurance, 90% fewer amendments, TDS corrections, and even at the end of the day, productivity impact as well, because there is no manual intervention required. There is no need to prepare any manual sales and purchase registers at the end of the day. While I talked about the downstream problem, which is once you book an invoice in your ERP, there is a lot of upstream problem also that needs to be solved. So primarily how Clear is helping customers is via two platforms. One is a compliance platform wherein your entire indirect taxation, your direct taxation, your company laws, your labor laws, your ESG laws are getting covered, which is a downstream problem once you have booked invoice. Just one minute. And then there is an upstream problem at the time of vendor onboarding, because non-compliance start if you onboard a non-compliant vendor. If you are transacting with vendor whose GST is suspended and you are not aware, then it is a problem. So with that, we came up with this entire accounts payable automation, vendor management, and then financing piece of things. Specifically, if I talk about the supply chain suite, use cases like solving the vendor onboarding via do-it-yourself model, re-KYC of your existing vendor, because that will be required if you were to do IMS very properly, because you have to navigate to your vendors day in, day out. entire vendor portal, your accounts payable automation, and then obviously on the supply chain side of thing via invoice discounting. So this is just one video I'll want to cover how supply chain suite of products would help create an entire platform to solve compliances at a holistic level.
Finance teams like yours carry the crucial responsibility of balancing day-to-day operations with long-term profitability of your business. And at the heart of this lies a meticulously streamlined accounts payable process. Typically, this process is riddled with repetitive and mundane manual tasks. These inefficiencies lead to several consequences for your business. But what if we told you that we could fix your compliance and cash flow problems at the root? Manage your entire finance lifecycle at one place with an end-to-end ERP integration, supported with powerful accounting and tax treatments, and access to rich reports in MIS. Introducing Clear's Supply Chain Suite of Products, an AI-powered supply chain digitization suite, vendor onboarding and KYC, vendor communication, invoice processing, and vendor payments and financing. Get ready to experience a whole new level of efficiency and effectiveness in your financial operations with Clear. Let us see the product in action. Create configurable forms for new vendors to onboard them automatically. We run 60+ validations so that your team has access to the most accurate data. You can also run re-KYC and compliance checks on your vendor master to ensure that it is always up to date. Since Clear is both an IRP and a GSP, we can pull all your vendor e-invoices directly from the GSTN, apart from the other standard sources, paving the way for enabling touchless processing. Our AI-enabled OCR and enrichment engine runs multiple models on your invoices to extract the highest quality information from them and references them across various sources like e-invoices, e-way bills, QR codes, TUI, GRN, and vendor master. We are talking unparalleled precision, ensuring an astounding accuracy rate of 95% on key fields. Since we pull POs and GRNs from your ERP, you can conveniently run two-way and three-way matching from within the product itself. You can also communicate and collaborate with your vendors in real time. You can then leverage our rich approvals engine for any approvals within and outside your organization. All approved documents are seamlessly posted to your ERP. Our groundbreaking innovation empowers you to digitize and process your invoices using state-of-the-art AI technology. But wait, the magic doesn't stop here. You will always have complete visibility over every nuance of the life cycle and macro metrics with our rich reports and MIS. Ensure that your vendors are happy by running an early payments invoice discounting program with them. With Clear, you can achieve incredible outcomes. Prepare to unlock a disruptive transformation in your finance processes with Clear, paving the way for you to work faster, smarter, better.
Thank you. Have any questions? I'll take it. Yeah. Anyone question? One or two want to ask? Thank you, everyone. Have a good day.
Thank you so much, Mr. Pulkit. I would request you to please stay back on the stage. And to do the honors, I would request Mr. Jaspreet Singh Arora from Cogent E-Services.